Hey guys, Sean Henry here, taking a look at the S&P with some market psychology. Very interesting range type day on our hands here, and a lot of interesting plays that you could have used on today's price action. So yesterday, the important thing at the end of the day yesterday, we got hammered lower on the S&P. They fell off the highs at 2105 and a quarter and ended their day all the way down here at around 97, 98 is where they closed, but down in that location. Now, that huge drive lower at the end of the day was met with absolutely no buying pressure, right? The buyers, very weak wick, doji, weak bull candle, relatively strong bull candle, good follow through, and then weakness when we opened up the day. So when you get a move this strong, a lot of times you're going to see the sellers follow it up with a secondary move lower. It just kind of makes sense. It's the market inertia. Get started and it turns into a freight train that is going to be a really tough time to stop. So you go along with the freight train. We see the buyers try. They fail, break down aggressively with a huge bear candle, and that is your signal, knowing that the buyers are giving up and the sellers are looking for that second leg lower. Beautiful drive lower down to fill the area of support at 89.50. Now we hit that area of support and we start seeing semblance of range. Lots of wick on the bottom, actually a huge amount of wick on the bottom. And then we get to the top and we have a huge amount of wick on the highs too. Now the reason I have this level marked right here, that's today's open, right across there at 97. Now the reason I have this level marked is primarily because any of the sellers that missed this move down now know that if we come back to that open area, that's where we really started the sell-off. That's where that big burst lower came in. And if we come back to that location, sellers are very, very likely to want to defend that location. So if you're waiting for that area, knowing the context of the situation, knowing that a lot of sellers may have missed this move, or maybe they saw this big bear candle and didn't want to sell that far down, they're waiting for a pullback. They get the pullback right into that level. We have a beautiful 1, 2, and then kind of 3 entries all off that same level with absolutely no bull continuation through it. And that is your huge clue. We can see the sellers are once again defending their earlier position in the morning, accumulating more selling and driving this thing looking for the low of the day, which we actually just tested now. So we can see the sellers come in once, they try again. We can see the buyers getting weaker and weaker. Compare those two to that bull candle. And then they followed up with another bear candle off the same level. There's going to be a huge amount of sellers that are coming in underneath that. And then they turn down again off of those highs, not even able to make it back to that level. And we get another strong bear candle back to the downside. That is a huge confirmation. If you didn't take that one, you didn't take that one. That is your clue. Get in the market, look for that low of day. Beautiful drive lower. And just a beautiful example of using that market psychology and knowing, you know, we've all been there. You get into a move or maybe you miss the move and you're just drooling over it, right? Come back for me. Please come back for me. They finally come back for you. You can reload. Everybody jumps on board and that drives that market right back down to the lows and they just got those targets. So beautiful drive lower, phenomenal example of using market psychology, and hopefully you found it enjoyable. Hopefully you learned something, and we'll see you next time.